You're listening to CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. And become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich quick? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Wednesday, 8th day of November, 2017. As you know, Michael's on a secret mission, and he won't be joining us for the show today, but I do have a recap for you of what happened in the live training room today. And tomorrow, when he does the recap, he'll go through the actual trades for both days. But I want to welcome you. If you're returning, welcome back. If you are a first-time visitor, a special welcome to you. We're glad to have you with us. We've been at this now. Well, we're into our second decade. So if you like it, pencil us in for the next decade, okay? Now, if you can't see the chart I have up, S&P 500 Emini Futures, go to our homepage at cfrn.net. On the right-hand side of the page, click the big microphone. Follow the instructions. You'll be registered all the way through the end of the month. That means you can join each day with one-click access. You'll be able to see the charts and have access to the chat box. Now, you can approach us from another direction. you can go to youtube.com/CFRN/live. Charts and a chat box there as well. Although I am not logged into the YouTube client, so I won't, until I get that up, I won't be able to answer any questions from that chat box, but from the main box, I will answer any questions that I can. Garrett Jones, money manager, friend of CFRN, and occasional co-host, will be joining us here in just a few moments. He normally comes on at the top of the hour, but it worked out better for him, for his schedule, to come early today. And I said, well, since Michael's not here, that'll work out just perfectly. Now, today in the live training room, what happened, they got the goal in 30 minutes and 4 trades. And when they closed out that 4th trade, we were up $197.50 per contract. Okay? All right. 30 minutes, 4 trades, $197.50. See, sometimes that will happen even though your daily goal is only $100 per contract. If you're trailing your stop, or once you have experience under your belt, if you happen to be in 2 trades at the same time, you can go over that $100 goal, as happened today, and $197.50 per contract. Okay. Once you learn to trail your stop, then you'll always let the market take you out. In the beginning, we have you work with you'll always work with a hard fixed stop loss. In the live trading room, we never risk more than 8 ticks on any trade. We trade every market exactly the same. Gold, crude, S&P, Russell, Euro, you name it. If it's a futures contract, we trade it with 1 set of indicators, 1 time frame, and 1 strategy. We have a spreadsheet you can look at. It covers every trade taken in the live training room for, I guess it's about the last 5 years now. Okay. If you want a copy of that, just email support@cfrn.net. Real quick, we'll run through the numbers from around the world, and these are the cash markets. Here at home, the Dow is down 18 points. NASDAQ is up 2. S&P 500 down 1, and the Russell 2000 down 6 3/4 points. No movers, no shakers. Crude oil trading $57 last, down 20 cents on the session. Now crude, I believe, hit our highest weekly trading zone yesterday. We'll take a look at that in a moment. Gold is trading $1286.80 last, up $11 on the day, almost 1%. In the Asian markets, the Nikkei closed down 23 points. Shanghai was up a little over, about 1 1/4 at the close, and the Hang Seng down 86 points on the day. And last but not least, in Europe, the FTSE closed up 16 points. DAX closed up 3, and the CAC was down 9 1/4. No movers or shakers in Europe, none in Asia, and here at home, gold would be the only one. So it's never a bad day when gold is up on the session. So you can see these are still last week's weekly trading zones. I usually move them around on Thursday. Partners get the new weekly zones every Monday morning, 6:15 a.m. Eastern. Before Wall Street wakes up, this gives everyone the opportunity to get the zones on their charts. Currently, we provide the partners with the S&P, the Dow, the Russell, gold, crude, S&P, gold, Russell, Dow, and crude. Yes, that is correct. So I normally reveal them to the community at large on Thursday. Yeah, we might just do it today. Yesterday, as price was climbing right here, these are 30-minute candles. This is not what we use in the live training room. Okay, we use a range chart there. As we were signing off yesterday, I drew this little circle and I said it looks like price is going to run up to last week's zone. And then I drew this arrow, I said, and then potentially make a move back down to this area of support below. It was a weekly trading zone last week. Now, here's the thing. Let me move the arrow just a little bit. Okay. Now, this didn't happen until 2:30. Price did go up, and it looks like it missed tagging it by, one tick. But again, that's last week's zone. It's also a zone from this week. Occasionally that happens. All right, so it missed it by a tick. It began to move down as I expected it might, and then right here, 1630, which is 4:30 for civilians. In 30 minutes, this thing ran all the way back to the zone, and then we had a gap lower open. No. Oh, you know what? I got to go through and change the time on my charts to compensate. See, the rest of the world has daylight savings time. Here in Arizona, we don't. And so, part of the year, I run off East Coast time. It's 3 hours because I'm the same as Pacific time from 8 months out of the year. I guess it is 9. Right now, though, it's only 2 hours to the East Coast. So what I have to do is I have to come over here. No, not there. I guess I can't get there with this. I have this thing here that you probably can't see. If you're on YouTube, you can probably see it. But I have to go in and I have to change the time on my charts. And go into the properties section and just bump it an hour. Okay? Because right now, yeah, see, it says that this candle opened at 1 o'clock, when in fact this candle opened at 12 o'clock Eastern. So I have to get my brain wrapped around that 2 hour change as well. But anyway, so that says 13 when it actually opened at 12. Okay, so this candle says 1900. Should be 1830. At 1730. 1630. So this candle closed at 5. Don't let yourself get confused, Dwayne. It's not worth it. I just want to make sure that gap is for real and not an error in the data. Well, it certainly shows up on the hourly chart as well. I will assume that was earnings related until I hear different. Somebody would give me an X in the chat box. I could use that. I gotta keep my eye out for Gary. Okay. So let's back up for a moment to the Globex Open Sunday night. November 5th. Yeah, exactly 1 hour off. So that was the Sunday night Globex Open. Very bullish for the first 30 minutes, and then we rolled over. All right, real quick, I'll give you a couple of headlines before Garrett gets here. We've already talked about the fact that the CME is rolling out a futures contract for Bitcoin. There's going to be options. We'll talk about that. One of the senior figures at derivatives giant CME Group believes that Bitcoin is on course to become its own tradable asset class. In an interview with Reuters yesterday, the company's chairman emeritus, Lee Melamed, said Bitcoin will likely come to trade in a similar way to how gold and stocks are exchanged today. Notably, CME Group last week announced plans to launch a Bitcoin futures contract, aiming to have the product available by the end of the year. We don't know what the margins will be. We don't know what it'll pay per tick. The product is still contingent on approval from the U.S. Securities and Exchange Commission. I thought that was already approved, but I think it's a done deal. Melamed told Reuters that he expects institutional investors to take part in the futures contract rather than just speculators, and call the move a very important step for Bitcoin's history. The product will enable investors to trade Bitcoin both long and short. We will re-guide Make Bitcoin Not Wild or Wilder. We'll tame it into a regular type of instrument with rules. This is such a huge step. Absolutely huge. In the interview, Melamed explained he initially did not believe in Bitcoin, but that his interest later grew. I'm still that same guy who believes in at least examining change. So, it is around the corner. Okay? And what are we going to do? Well, we're going to trade it. And how will we trade it? The same way we trade the S&P, the Dow, the Russell, the NASDAQ, crude, gold, you name it. That's how we'll trade it. I still need that X in the chat box from somebody so that I can communicate with Garrett when he arrives. Now, along with the futures contract, along with the options contract, Bitcoin is about to undergo a split or so-called hard fork, which has the potential to create two blockchains, each with its own set of coins. This brings to head a 3-year-long battle between two factions who've been warring over a seemingly technical question over how to increase the amount of transactions the blockchain can process per second. Whether or not that divorce becomes permanent or not is the $100 billion question. The two sides have been duking it out on Twitter, Slack channels, and email lists, and though certain indicators look bad for each one, neither block is backing down. I don't think it will cause havoc at all, according to Mike Belch, one of the developers working on the new fork of Bitcoin. You can hear about that on the latest episode of the podcast, Unchained. Mine's going to be called Off the Chain. In the episode, representing those against the so-called SegWit 2x hard fork, which should split off on or around November 16th, is Bitcoin protocol developer Matt Corallo. He disagreed with the process by which the decision to hard fork was made. There is no discussion, as Mike said. This New York agreement to do the SegWit 2x hard fork was pretty much a declaration. It said this change is happening. This is fundamentally incompatible with the process that is Bitcoin's core. Plus, some exchanges are offering so-called chain split tokens, which function as futures markets, and those indicate the vast majority of community support is against the hard fork as well. Across multiple exchanges, the 2x tokens are trading at around 15% of the current value of a Bitcoin, while the 1X tokens are trading at around 85%. Despite the lack of community support, Belch would not name any particular threshold at which his side would call off the hard fork. In fact, because the change his faction is working on contains two technical changes, one called SegWit and the other an increase in the block size limit from 1 megabits to 2 megabits, and because the first part of the plan already occurred in August, it's already activated. He also noted that the volume on the chain split tokens is a very thin $2 million a day, and so dismissed the idea that they were representatives of the community. Corallo rebutted that any hesitation people feel about putting their bitcoins on exchanges should affect both sides equally, and so the difference may still indicate how little support the 2X side has. One place where the 2X chain is likely to have a lot of support, however, is from the miners who run the network. Their support has been north of 75% since last July. Assuming that the 2X chain begins with the majority of the current hash power, the 1X chain will be vulnerable to attack. Corallo shrugged off the idea that a miner would find it worth it to attack the minority chain. In the hypothetical scenario that the 1X chain begins with 15% of current hash power, he said, you have to take 15% of the hash power globally that you have and attack this chain instead of mining something useful. And if your attack works, all this money you spent on mining those blocks is useless, and that is a ton of money to throw down the drain just to make your voice heard. He also noted that a previous fork of Bitcoin created in August called Bitcoin Cash has not yet been attacked. Again, you can listen to this podcast on Google Play, iTunes, iHeartRadio, Stitcher, TuneIn Radio, and the name of it again is Unchained. Okay. Now we are going to be off the chain, but they are unchained. All right, Unchained Melody, great song. One of the really greats. Can I get a new window? Yes. Thank you for that X in the chat box. Much appreciated. Okay, Garrett should be here. Maybe I'm just overlooking him. Okay. I want to make sure he's got the new link. That might be the issue. It's been a while since he's been on with us. And I'm also looking for something really important I want to share with you, but looks like I may not be able to. Why? Because I can't find it. Okay, I'll find it later. It's really important. I'll tell you then. All right, price on the S&P. When we opened Sunday night, Globex opened. We caught a little bit of a rally. We took a dip. And then we made a nice run up to where we currently have a double top, which has sent the market right back down to where we started Sunday night. And now we're attempting to rally this market. And don't forget, at this whole little area here where I put this rectangle from 25.92, yeah, I figured call it 92 to 93. Is that a zone this week? 92, 93? No, the zone's at 94.95. You know what? I'm just going to go ahead and do those right now for you. 94, 95. Okay, below that, 87, 88. That's a carryover from last week. Sometimes that happens. And then we've got let's see, after 87, 88, we've got 80, 81. Okay. And then we got 72, 73. And then we've got 66, 67. And 49, 50. 49, 50. Okay. Now, should we break out above 94, 95, we got one more zone overhead. 2610. Now keep in mind the partners had these Monday morning 6:15. Why is that important? Well, depends upon how you use the zones. Some partners just kind of trade the zones. Most partners use them as a backdrop to their trading. If you've ever been in the live trading room, you know that as we're approaching a zone, whether it's to the upside or the downside, if we don't have 2 points of room to run, we don't take that trade. Okay, I need this to be lower, and that does it. Now that's how quickly you can put the new zones on, partners. Depends on what method you use. Okay, so there we go. Now we can take off where it says last week's zones, because these are this week's zones. I should have just edited that. And so no, they did not move an awful lot. Although we've had volatility, we've been kind of in a range. I mean, after this Globex open Sunday night, we passed through this zone. Now these are this week's zones. Okay, we consolidated. That's what we're supposed to do when we hit a zone. Consolidation is the most likely. Rejection is the second most likely. And the third is what I call a hot knife through butter. That's when a candle just slices through it as if it weren't even there. It will then, there's a high probability if that happens, that it will return to the zone it sliced through, price. It will consolidate, confirm good support or good resistance, whatever the case, then continue in the direction of the slice. Okay, you can see here we went from zone to zone, consolidated, down to the zone, back up to the zone. It was this trip here where we didn't make it all the way down. Okay, then back up to the zone, and then we had that gap lower open last night, and then now this isn't a huge zone, but it's 6 points. Okay, so you've got 6, 12. That wasn't a full move. 18, and again here. Keep in mind, zones are an area, just like fibs. This we missed by 2 ticks here. Fibs are an area, even though they give you an exact number on your chart to look at. It's an area. Okay, sometimes it doesn't always pull back to the tick, to the 50 or the 38 or the 62. It might overshoot it a little bit. It might come a little short, and so you have to kind of develop an understanding for that and watch price action to understand what it is the market's doing. I mean, is it going to fall short? Once price passes through a zone, I like to get 2 points on the other, like right here. If we go up to 94, 95, I want to see 97 before I get long. From 97, I got a...
Hello, Dwayne?
Garrett, there you are. I've been waiting on you, sir.
Oh, I was sending you little messages over there, but I figured I should.
Yeah, I
speak
just
up.
saw that thing started blinking. How you been? It's been forever since you've been on the show.
Been a while, huh?
Ladies and gentlemen, this is Mr. Garrett Jones, and he has, oh, there it is. How do you describe yourself, Garrett? I call you a money manager. Is that the proper term for you?
Sure. Does
that work?
Probably the right term.
Okay. Now, Garrett also does a newsletter called Observations that goes to a private audience, but I read that a couple times, and we've been having these little conversations for a couple years now, I guess it is. So tell me what you think about the biggest news on the street, I guess, the fact that the Chicago Mercantile Exchange is rolling out a Bitcoin futures contract.
I think it's probably a great thing, because for those people who aren't sure whether they want to participate in Bitcoin or not, or have their doubts, I would presume they can at least trade it, right? I mean, you're going to trade it like any other contract?
We're going to trade it in our live trading room. We'll use the same time frame, same indicators, same strategy that we use for every other market. We're a one-trick pony, and we'll trade. We don't know what the margins are going to be yet. We don't know what it will pay per tick. But they do say that the product will be out by the end of the year, and there's an options contract coming too from the CBOE, Chicago Board of Options. Is that what it's called? I don't do options, but you would know.
Yeah, Chicago Board of Options Exchange. That would be, I think it's a great idea, because I think there's a lot of people who, first of all, most people don't have enough information about it. Secondly, those who have doubts whether it's going to blow up sometime or not, at least you can, in other words, you don't have to have a Bitcoin account to trade Bitcoin, do you? In other words, you don't have to have a bar of gold to trade gold. Well, you just have to come up with a margin and participate that way, right? I mean,
correct.
It'll be just,
yes. This will be done in U.S. dollars. So
yeah, and I think that cures a lot of ills for people, or answers a lot of questions. Those who see that, gee, this thing's got a lot of potential. I don't know if I want to put my hard-earned savings in it, but I might want to speculate in it. They can go out, once they have options, they can go out and buy options, and if it works, great, they get to play and participate. And if it doesn't work, then you've put up a relatively small bet. It seems like it's a good thing, and for those that are in it, they can use it to hedge their position. And I don't see any negatives.
The comments we read earlier from the CME, the gentleman there, I've got it right here, CME Group's Elio Melamed, he says, will tame Bitcoin. At first he wasn't a believer, but now he is, and he's excited about bringing the product to the market.
Yeah, I don't know why you wouldn't. I mean, the whole point of the market is to allow people to participate in things they believe in, or don't believe in. You can short them too. So I mean, it just it gives flexibility and allows another option. And if it's a viable option, where's the negative? I had some charts for you. If
let me send you over the charts. I just wanted to. Did you see this here? Can you see my screen?
Let's see. Yes. Okay, Crypto World Radio.
This is just the Twitter feed. The actual site is under construction at the moment. But take a look at this. This will blow your mind. I don't know, a month or so ago, a little longer, I brought up GoDaddy just to show people that crypto world was selling for $29,000, cryptoworld.com. Last week I showed it to everybody again, and it's now for sale for $194,888. By sticking radio on the end of that, my cost was $8.
Wow.
I love it. And the people at GoDaddy, they're like, oh my gosh, we can't believe you did that. I also got cryptodailyinfo.com, which is almost ready to go live. Now, what this will be is it will be all of the
Sell.
It will be all of the top rated podcasts from around the world. And some people publish on, their show once a week, Monday, Tuesday, Wednesday, Thursday, whenever. Some come out daily, but I'm going to aggregate all of the good ones from around the globe. So people will be able to go to cryptoworldradio.com every day and get the latest podcast. I'm a big podcast guy, of course, because I've been doing it since 2005. I was one of the first guys in iTunes. Fuad appears to have specs for the new contract. Thank you very much. Let's go take a quick look at that, and then I'll give you the charts. But isn't that incredible? Now that's just a domain name. There's no website there. Just cryptoworld.com. 194,000. Wow. Yeah. Okay.
That's incredible.
All right, so here comes. Okay. Apparent. Is it on this? Okay, here's the 5 Bitcoin as defined by the CME CF Bitcoin reference rate. Okay, so one contract will be 5 Bitcoins. Minimum price fluctuation. Outright, $5 per Bitcoin equals $25 per contract. Trading hours will be same as everything else, I guess. Although the actual Bitcoin market does trade 24/7. Okay, so when you buy one CME Bitcoin contract, you're buying a block of 5. Why does something not seem quite right with this?
Dwayne, I'm going to be a little pressed on time.
I
can come back later, or
I'm sorry. No. Let me just.
If I don't want to interrupt your deal, I'm just.
No.
I got
I didn't realize you were on such a short rope. Okay. You got the charts coming your way.
I'll tell you what I thought I'd do is, I thought I'd just take a look at the big picture, see where we are, because a lot of people are saying, in other words, what you're getting now is you're getting a situation very similar to 2000. People are making comments that, hey, this thing's just starting. After a 9-year bull market, that's an interesting comment. This is just starting, and this thing's got years to go, and et cetera. And of course, no reasons behind that. But I thought, let's take a look at it, and just see, because and then the other people on the other side that have been around for a while said, they're looking at this and saying, wow, I think this chart would surprise people. This is a regular arithmetic chart. It gives you some visibility. Here's 1987, which was a 40% crash. That's a parabolic move. Each of these are parabolic moves. There's a parabolic move into 2000. What happens after a parabolic move? You have a pretty good correction. This is the Dow. That's about 50%. Once again, another parabolic move into 2007. Again, 50% correction or so. Now, look at this move. And isn't this interesting that you have, just think of the economies. 1987, you've got a president that won 49 states. You've got a roaring economy, and you've got a tax bill that passed. Hot economy. Everything's going right. Every reason in the world for this market to go up, and it gets a 40% correction. In 2000, new era, technology, the whole thing got way, way overdone, but strong market, strong leadership, strong economy. Boom. Here, decent economy, nowhere near the economy of these two. And then you had the real estate situation and so forth that brought this down. And here, you've got, for 8 years of this, literally for virtually this whole move, not counting the last year, you had 1 to 1.5% GDP growth over the past 10 years, which gets into George Bush's term. You had the peak in GDP growth was 2.7%, and that was under Bush, not under Obama. Obama had the worst GDP growth of any president in the history of the country, and this is your market. Something else is going on there. I think we know what it is. It's a manufactured market. It's QE. It's zero interest rates, and it pushed everybody into the stock market. And now you're getting more of a move. But anyway, this is what it looks like, irrespective of any news, anything. Here's your market. Are you buying a bottom? Not the way I see it. But anyway, there's risk there. Here's the Nasdaq 100, and here's what happened over here in 2000. This was just a crazy move. And look at your correction. You go down and correct almost the whole move. This is an 83.5% correction. This is what followed this market. And then it took a long time, and it couldn't hardly even couldn't even make a 382 retracement, maybe, something like that. And then an ABC correction down to a low here in 2008. That market bottomed in 2008, kind of double bottomed in 2009, and now you've got this same thing going on again. It's gone up, it's gone higher. By the way, this red line measures the move. This red line is this red line moved over here. So we've done that move. It goes about here and added this to it. I've done channel lines here and said, okay, this is about as aggressive as I can get. That goes up here. We've blown above that. I drew, I drew this line in just, from the 91 low, catching these lows here, catching this low, which is, just a makeshift trend line, and bring that up there, and that goes up to where we are. But we're once again doing what we did in 2000, and there you go. So just something to be aware of. This is the S&P Cash Index monthly. Again, there's the 2000 move. I put my oscillator in here. Here in 2000, you have a clear divergence and great place to sell. You get sold off down here. Here you don't have a divergence. You actually went a little bit higher here based on your way up, but you certainly had a divergence from back here, and then you have this correction and get quite a bit oversold, and now you're in this elongated move. And I don't know. The Elliott wave count, you can do 1, 2, or 1 ABC 2, however you want to do it. But I'm giving it the benefit of a doubt, putting the most bullish count I can possibly put there, which is this one, which is 1, 2, 3, ABC 4. That's pretty clear. And it looks like we're moving up into the upper part of this channel here. Right. You've got a divergence here, but I'll give this market its due. I mean, this is pushing, and if it somehow pushes higher, you're gonna go above this. Now that hasn't happened yet, and you're very stretched out here. But so far so good. Here's the S&P monthly again, and I just put an RSI down here, and I was looking at these prior levels, where once it gets up, here you've got a divergence, and it's at about 69 here. This one was at about 69 on the RSI after a divergence. Here you had a little divergence in 2015 at the 69 level, and boom, you got your correction. And here's the 69 level over here, but it's not there anymore. Now it's gone up to 76. So the argument would be, okay, now the relative strength is way overdone. But you're, by and large, that's all that's there. The relative strength has got to an even higher level, and probably you should be cautious. But there's no sell signal yet. Of course, that's a monthly chart. So if the market tops tomorrow and you've got to wait till the end of the month, lots of things can happen. Here's a weekly chart. Let's see what the weekly's doing. So I don't know. This is my count, which certainly doesn't make it right, but it's a thought. 1, 2, again, giving it a pretty bullish opportunity. 3, 4, and then maybe 1, 2, 3, 4, 5. Who knows? But look at this. This is my own indicator. Here we are in wave 3. There's no divergence. We've gone higher here now. By the way, that doesn't mean that you can't turn and go lower, but you're not going to have a divergent sell. So, will it be a big correction? Hard to say. Nothing here that says that it will. So, this is the Nasdaq, by the way. But I just put this on. Again, we kind of covered it in the chart before, but look at the parabolic move, and here's kind of a big parabolic move. Now, if it's going to have that kind of angle to it, maybe we just go straight up here, but it's very hard, throughout history. In '87, when you had that big move, you had a remarkable economy. You had a reason for it. People say, well, gee, it got way overdone. You had a 40% correction. I said, well, that's fine, but at least you had a reason. I mean, you had remarkable leadership, a remarkable economy, very robust economy, a great tax situation, and a president that was liked all around the world and in the country as well. We don't have that right now. We didn't have that. We haven't had that for a while. 2000, same thing. But now it's like, why is this happen? Why did this happen, and why is it happening? And by the way, QE and ZERP answer this part of it, and maybe up to here, and maybe even up to here. But they're being removed. So is anybody getting the message? If that's what fueled this, we know it wasn't a great economy that fueled this, because we didn't have a great economy. And we've got far more problems now than we had in 2000 or 1987. The debt picture, everything, new things, the problems that we didn't have before, student debt, student loan, food stamps, home ownership. It goes on and on. But here's the broad market. I brought this in, Dwayne, because this is the value line index. If you're looking at the Dow, you're looking at 30 stocks. If you're looking at the S&P, you're looking at the 500 best stocks out there. If you're looking at the value line, you're looking at 1,700 stocks and change, a little bit more of a broad market. And look what's happened here. Here's 1998. Here's 2007. Comes right up to the same price and tops. Here's 2015. It peaked above it a little bit. And here's 2017. Now, we're off the charts in every other chart I've showed you, but in the value line, we're still playing around with this channel line right here. I mean, we haven't, we popped above it here and got overdone in 1998, which is basically the equivalent. In other words, the breadth of the market, the large number of stocks topped in 1998. So did Warren Buffett, by the way. Remember, he didn't play the technology stock, so he topped here, and when the market topped in 2000. A month or two later, he bottomed. So, very contra market, at least at that time. But anyhow, here you've got in this area.
So Warren Buffett, he never participated in the .com run-up back in the day?
No, he didn't.
I don't know. Let me just say I did not know that, or I don't think I did.
Yeah, Google it.
No, I believe
sure
you. No. I absolutely believe you.
I'm sure he's participating in it now. He thought it was, overdone, and it got overdone. But on the way up, everybody certainly had a good time. 83.5% correction, though. It tells you one thing. It tells you a whole lot of companies went out of business. And probably a few of them wish they had, but 83.5 is a pretty big number. This here is interesting, though. This is the stock market, and because you see right now you've got a strange world. You've got Apple, whose capitalization is about 25% of the S&P. And by the way, there's a few more stocks in Apple. So in a sense, you've got the tail wagging the dog here. And as long as that tail's in good shape, everything's fine. But everything else, this is the rest of the stock market. And you're having a big divergence. Here you've got a divergence. You've gone higher, but there's no question that you've got a divergence. You don't have one with 2015, but you certainly have one with your peak over here. You've gone higher, and there's a divergence here. So anyway, it's just interesting to see what's happening with the broad market. This is these are just a couple of things. Basically, the red and the yellow lines are lines that I use just to say, what's going on. Is how are we doing in the trend? Mm-hmm. And even if I buy the crossover here, it's got me into here and out there, and in here, and you're still going. So nothing's there to cause any harm to that. The blue line that's in there, what I'll do if I'd like to get out at the top, for example, or thereabouts. Let me see if I can blow this up a little bit.
Yeah, there you go.
Well, let's move it over here. Let's look here. See when this red line, the line that's the top line, in this case the fast line, it breaks the next line, my blue line, which is called a T3 line, right there. I can get out right there. In other words, if you got this move, boom, I'm gone.
Mm-hmm.
And when do I get back in? Well, when it crosses the first line, here it crosses them both. By the way, this is a great buy signal when you've got all of them coming together at one place and your fast ones coming up from the bottom. So here, but once again, here you get out. Again, for me, it's below the prior low if I'm concerned about it. But boom, it gets you right back in. I mean, you're back in, and you've got this run up here, and so forth. Anyway, I just threw that in for the heck of it. But
okay.
Now, in the process, oh, there we go. I was going to say, here's something that I think is kind of interesting. Let me see if I can move that over a little bit. There we go. This is the entire bull market. I like to draw channel lines, if I can, that encompass the entire bull market. And this one does. And what this does is takes this initial top on wave one, catches these tops along the way. These are all the arrows. These are, as you know, the thing that gives validity to a trend line is the more points that you can hit on that trend line, the more valid the trend line. So what this says is that you got a very valid tops line. You don't even have to go beyond this. You just up to this point. Therefore, what do you parallel it off? Well, you parallel it off the bottom. That's the key place. And here you're coming up, catching this low. This was an extreme. You're catching this low. You're catching this low and this low, and you're catching this one here. So once again, the price angle is very valid. In fact, I would venture to guess that this price angle is more valid than any other one that you can draw in there if you take in the entire market. And here you've gone from an emotional break below the market here and below this channel line to come back inside of it and run from well below it now to the top of it. And I thought, gee, if we just came out of a depression and or a strong recession, and all of a sudden we've got a much a highly popular president, and we're dropping taxes, and everybody's starting to buy in the U.S., and earnings are going off the chart, and everything's great, well, then it probably gives good reason why you're there, number one, and number two, maybe you break out to the upside. At this point, you've traversed an incredible distance, and the interesting thing is you have not had a correction. I mean, the largest we haven't had. Here's something to think about. From 1927, the average number of days you have to wait to have a 5% correction is 71 days. 71 trading days. We have not had a 5% correction for 70 weeks. So
70 weeks. We've not had. Say that again.
We haven't had a 5% correction for 70 weeks. The largest correction we've had is 3.25% following the March top. So I mean, this is really insane. This movement here.
Really is,
this is the least volatile market in history. It's the longest you've gone without a 5% correction. It's the only year that hasn't had a 5% correction. Most of them have 3 on average. Some of them have them, all the way through the year. But this is, and the question is there a good reason for this? I mean, I like Donald Trump. I think he's, if you read the news, he's, a horrible person is going to take over the thing and ruin the country, or he's already done it. If you do a little homework, the guy's done a pretty good job, and what a horrible person. He's talks positively about God and believes in the Constitution. How could it get any worse than that? What's wrong with him? I'm just foolish enough to think that, gee, the guy likes the Constitution. That's a nice change. And by the way, this country got successful when we did follow the Constitution, and not quite as successful after that. And a man who believes in God. What a anyway. Yeah. I find him refreshing, and necessary. But even so, and granted, he's got the economy going at a 3% clip, as opposed to about half of that during the Obama years. But pardon me, we've had all this happen based on nothing, and now you're getting some good stuff in this part right here. Does this make up for all of this? And once again, we know why this happened. This market was created by QE that was necessary to stop this decline, and then they continued to do it. And what it's done is it's doubled our debt. And this is money created out of thin air that we're supposed to pay back to the Federal Reserve. That's an interesting thought. And it stopped. QE has stopped, and they're going to now, the Fed will be working on cleaning up their balance sheet. So it means that it means two things. It means QE, everything that's been pushed into the market to create this, is now not going to be there any longer. So something else has to come in to replace that, which would be ravenous buyers. And number two, you're probably going to have interest rates go up. Now, clearly they can't go up. They can't go up very much or very fast, because if they do, the United States goes out of business, and we can't have that happen. But that's what we're looking at. So the question is this trend line going to have any validity? It has. I would think that it should, based on reality, but we're in a world where reality, everybody forgot about reality. So, and you got to play them as they lie. So, but this is the advanced decline line. The yellow line is daily advanced declines. The red line is a 10-day moving average of the yellow line, and the blue line is a 30-day moving average of that. So by and large, what you want to look at here is the trend, and you do that with the blue line. So up, flat, up, flat, up, flat. It makes it pretty easy to count Elliott waves and sometimes they're not that easy to count. And here you are from the election low, so that's wave 1, wave 2. Now, by the way, where's that? March 1st. That was the top of the market. Here's your ABC correction. That's a 3.25% correction, or 3.75. One or the other. I can't remember which one, but certainly less than, considerably less than 5% correction. It's the biggest correction this year. Then you get this, which would be a wave 3, and it rolls over and comes down. So that's wave 3 there. That's the high in early August. That was a high. There's your correction. Again, nothing, 2% and change. And now that's wave 4, and we're in wave 5. Is this the end of wave 5? Apparently not. We've moved up a little bit, but look what's happened. Now you've broken through the fast line. The fast line's broken through the blue line, and both of them are here right together. So it looks like it's set up for a decline, but in this market, who knows? It's certainly not. This market is not fueled by what we've seen in the past. By the way, I think this is this is the diamonds. This is the ETF for the Dow Jones Industrials, and this is a weekly chart, and this comes up from the this is 2016 low here. So this is Obama's last year. So we're up 1 2 1 2 3 4 5 3 ABC 4 1 2 3 4, and it looks like one heck of a parabolic fifth wave. Your RSI would imply the same thing. The relative strength here is the strongest here, and that would seem like it's running into the trend line, and it's apparently losing momentum, but it's not losing ground. So, once again, in any other market, you just short your ears off at this point here with this type of an overdone reading. But in this market, who knows? You do that and do it carefully. Here's a daily the S&P 500 cash index on a daily basis is what I'm trying to say. This is your typical 2% bands, and once here we've come up out of the bands. That doesn't happen very often. You don't very often get outside of an upper band. We were outside of it yesterday, and this is setting up with a little bit of a divergence if in fact we're going to top out here. So there's a lot of stuff that says, and by the way, here's the blue line here. This is kind of the ongoing channel, and obviously that channel has changed here and gotten significantly more aggressive. I don't know what happened in the last 2 or 3 months to that would answer that, the reason, that would be a good reason for why that happened, but whether there's a good reason or not, that's what's happened. So we've got a very aggressive move from this August 21st low here.
One of the most aggressive moves I think we've seen.
Yeah, I mean, we've had an aggressive move to get to this point, and now we've put an upward angle on it. Matter of fact, if you go up at this chart here, you can kind of see it. I mean, here's a darn aggressive move, and here's your darn aggressive move taking an almost vertical angle.
Would you go so far as to call it irrational exuberance?
Oh, I think that's as a matter of fact, I did that in something I wrote up yesterday. Is exactly what I used. That of course was Alan Greenspan's term as the market was in that move from 1994-95 to 2000. Irrational exuberance. It proved to be irrational exuberance, but the question is where, And,
hey, I just noticed John. Hey, John, I turned your mic on. I know you want to say hi to Garrett. Are you there? Keep going, Garrett.
Anyway, no, it's nice timing for, by the way, because that's my last chart, and oh, no, we already saw that last chart. I just went up to it. So yeah, I've got that's about all I've got. I just wanted to say let's take a look and see what's going on here, and and see what we can make of it. So it looks like we've hit kind of an upper area here that's fairly stretched out. So my comment here would be that's probably not a great place to make a purchase, to go long. For somebody who's interested in going short, that looks like it looks like a great spot. I mean, every other time you've reached this line, you've had a correction here, you've had a correction here, and this one's been fairly extreme. So
if it only goes back to the middle of the channel. Hey, John, welcome to the show. Sorry I didn't see you there earlier.
No, that's okay. Can you hear me?
I can, and Garrett is still with us.
Hi, Garrett. Hi, that was a fascinating chart that you put up there with the advanced decline, because as I've been saying on the show for a couple of weeks now, the advanced decline has been declining almost every day, and that's a bad sign. It doesn't mean to say the market can't go higher. That's what people don't understand. I mean, what's different about this market, and I think you and I have talked about it before, is the advanced decline has been in a meteoric uptrend for just like since '09, really. And apart from the corrections, and actually that chart is a really great buy sell. When your red line crosses the yellow, I mean, you can't go wrong going long on those things. And probably when it goes the other way, it's probably means the market's going to pull back. So here's the trick, though. Right now we're on a kind of a sell based on that, but the market's still going higher, and that's the nevertheless, that's a kind of a warning sign. Now, if we start turning up from this thing, that you just put up, that's incredibly bullish, I would say, in spite of the fact that we're already at crazy levels. It's kind of interesting. I don't know whether you saw the news. The Gottman had been kind of negative.
Oh yeah,
and he threw in the towel yesterday and kind of went long. You got to be very, very careful when people do that, because that's what happened. Remember, Dwayne, we've talked about the 6 analysts who were completely perennially bearish for all the 90s. And look, to be fair to them, the 90s were a lot harder to figure out the market, because the advanced decline didn't lead the market higher for a lot of the 90s. That was the big kind of fake out, if you like, or head fake. And this one is so different, where the breadth and the broadness of this market is mind-boggling. I mean, we've never had anything like it ever. And now look, just to support what you've been saying, Garrett, look at the transports today. They're down 50 points. And they've been beat up pretty bad since the trans hit 10,000 plus. We've come all the way back to 9,600. But and that's a kind of a warning sign as well, that trouble ahead. And look, it's individual. My other theory is, when you get a shot across the bows, and you've had you tend to get a lot of crazy upside stocks in the final weeks before a pullback, such as what we had yesterday with DCIX. In the last few days, been up several 100%, more than that, up 1,000% almost or more. And then we had RLOG yesterday, was up 400 or 500%. And we've had in the last 2 or 3 weeks, we've had a lot of medical stocks going crazy. And actually, I recommended one a few weeks ago. I might have even mentioned on the show, ONCS. We put that out at $1.10, and it opened at 2.15 today, or somewhere like that, which was amazing. And it's actually still in play, this ONCS, because if it when you get a big double kind of a double upside day, if we start to firm up towards the end of the day, this stock could go substantially higher. And I heard from some people who know the company that there's some pretty sharp guys involved, and they're actually working on melanoma cancer, and they may be the melanoma company to note. Now, I'm not recommending this stock because it's dangerous at this stage, but it's interesting. Look, I didn't expect it to double. I thought it was a reasonable play, but when you get a double in these pharmaceuticals at this stage of the game, they can go a lot higher. And this is a stock that's been to $30, so it's definitely got some upside. and if the big boys want to make it happen, they're going to make it happen. There's another stock today that's gone up crazy since the opening called KBSF. So anyway, the third thing that happens near the top is you get shot across the bows. And yesterday, Priceline, and incidentally, just by accident more than anything, just by discipline, and the same kind of discipline that you put out every night, Dwayne, we were already short Priceline going into yesterday's announcement. And I didn't even, the day before yesterday's announcement. And what we did was we added to the position right on the open, or as soon as the news came out after the close, it was down about 100 or something. Next thing you know, it opens down, maybe it was only down about 70 or something. Anyway, continued to go lower. It opened down. We sold the opening yesterday on an alert, and it ended up down $264 on the day. I don't think there's ever been a stock drop that much in one day ever. And look, there's a lot of people who are short, who are long Priceline. Major funds, very widely held stock. And I think we mentioned Under Armour yesterday, which has gone from 100 down to 11 or 12, and some of these other stocks that have been beaten up are warning signs of real trouble. And Celgene, the whole look at the LABU today. I mean, I really thought that thing would go to 100, and it just couldn't cut it, and it's gone down. It's on a low. It's making new monthly lows today. So the drug sector is in a lot of trouble, and so we're not going up by very much today. We're only up fractionally on most of these indices. So we got an anniversary here a year ago. You remember what happened? We scored big a year ago when we called this market ahead of time, and nailed it on the Trump sell-off before it recovered, and so we got to be very, very careful here in the next couple of days on a possible anniversary top. It doesn't. I mean, look, this is just an idea. I'm not, because right now the market is very strong, but there are these influences that are troubling. And look at Insight today, INCY. This is another pharmaceutical stock that's getting beaten up pretty badly today, and it's come off a lot. Hang on a second. And
Garrett,
if you remember,
I know you've got to. You said you were on a short schedule. Are you still there, Garrett?
He might have gone.
Oh, we lost him. I'm sorry. Okay, go ahead, John.
So anyway, yesterday was a pretty interesting day. Look, also these VIXs, I would be very, very keen to be long the VXX if we break out to a new high this afternoon, or even, I'm not sure about right here to be buying it, but if the market does sell off this afternoon, I mean, if this market sells off this afternoon and goes negative, I'd say you absolutely have to be short, and you have to be long some kind of a, counterplay like the VIXs, because if we give it up from here, it's I mean, I'm almost certain that a negative close today will be very bad news for this market, and I really haven't said that, for a while, and even as I'm speaking, the LABU is hitting new lows. And actually Priceline, we went long last night for a quick $10 gain, and then we went long before the close, and I had a feeling it was going to rally this morning, and it did, and we sold it up around 1668, and it's down quite a bit right now, already off that high, and if the market starts getting, the other thing that's going very that's put me on edge today as well is Nvidia is selling off, and that is very troubling. And AMD also is crazy. The stock ran up yesterday on some kind of news, and it's down today, and it's kind of reversed yesterday's action. That's not very good news either. And the semiconductors are also topping here, possibly topping, and not confirmed yet. But if we were to break down from here on the semiconductors, we actually could put in an island top. If we were to gap down here in the next couple of days, that could be very, very. That could mean we're in for a correction of some consequence, I might say as well. And Amazon, Google, Apple, they've all been kind of they've been edging higher, but they really haven't gone too much of anywhere in the last few days. Facebook is down on the day. I think that's it's not doing anything too drastic just yet, but if it was to break to below 179, 178, it would start to look that could hurt the market. And there's a possible island top there too. So if anything, I mean, look, there's so many things that could go wrong in the world right now. You've got this whole situation in Saudi Arabia. I mean, there's a real possibility they could tell you. The king. There was a news report out overnight. I haven't seen whether it's gotten more traction today, but apparently the king has already kind of passed everything over to the son. I mean, he's already abdicated. And so the son, if somebody takes him out, there's a lot of powerful people. They've got this Prince Turki guy, who was a very big power broker in Saudi Arabia, former, head of their CIA kind of thing, intelligence service, incredibly powerful guy. And apparently the army's up in uproar because half the armies or most of the army is loyal to people like Turkey and Naif and these other princes who are sort of fighting to be king. So there's a real powder keg over in Saudi Arabia. And if there was, I'm pretty sure if there's a coup, you're going to see oil skyrocket, and you're going to see the market tank very fast, I would say, if that happens. It may be a 2 or 3 day event, but you probably get a pretty big, something happening. And look, this Lebanon situation. You and I probably talked about this 10, 15 years ago, Dwayne. This Lebanon situation. I mean, I don't know why. I used to say back in the early, after 2000, after 9/11, I used to say, why didn't George Bush? It's always, George Bush the first, right?
Yes.
Is half of the problems today are because of him. He, braggadocious guy, he did so well in the Gulf War. Look, he did a great job in the Gulf War, but he didn't finish it. If you don't finish the job, you leave this whole Middle East situation festering. And then Saddam Hussein spent 10 years creating an insurgency through the Republican Guard and the army, so that when we had to go in a second time, it was very costly in terms of 4,000 lives and 30,000 injuries to all the poor people that had to go over there and do it the second time, and it was a pretty tough job. And then we had ISIS come out of it. So the whole thing was a complete disaster because they didn't take out these terrorists long ago when they should have. Today we'd be living in a different world. If I really believe the Twin Towers would still be standing in New York if George Bush had gone in and taken out Saddam Hussein the first time around. Not because it might have prevented Bin Laden, but it would have enabled. We would have gone in and taken over Iraq. We'd have had a much bigger presence in the Middle East, and we probably would have taken the Bin Laden out as well. And it might have prevented all kinds of other horrible things from happening. So. The same thing with George Bush. How can you have a country where we had tremendous wars, in Lebanon for 20, 30 years, and then sort of semi-peace, but latent discontent in the background? You got a private army, the Hezbollah, kind of like operating with impunity inside of a country. It's just insane. And they should have gone in and taken out Hezbollah. Right off, they should have taken them out after the barracks. The 240 people were blown up with Reagan. That's when they should have taken them out all that long ago. Imagine if they'd done that all that long ago. So, Trump, and appreciate the good things that Garrett said about him, he's cleaning up the world big time and quick time right now. He's pretty much decimated ISIS like he said he was going to, and he's going after them everywhere else, and there's going to be no safe haven anywhere on earth. That's the only way this has to be. That's the way we've got it. They got, every time one of these things pops up somewhere, they got to be squashed as soon as they start. It's the only way. Would you agree?
I agree.
Yep.
I agree.
And you remember what I said before 9/11? I said this. I said we need 1 million man CIA and special forces to be, on the ground in every country. So it's not just signal intelligence and all this garbage that the CIA spews out all the time. That it's got to be on the ground. The James Bonds stuff. 1 million James Bonds out there who, get the job done, and know where the trouble is coming from. That's the world we live in. And if we'd done that from 15, 17 years ago, we wouldn't have half the problems we had in the last decade or two. And today it's the world's more dangerous than ever with North Korea and still the Iranian powder keg. And look, eliminating North Korea threat and Saudi and the Iranian threat, the world's going to be like a hugely better place, just overnight. The real, major risks in the world will be eliminated in very short order. And you don't have to be a rocket scientist to figure that out. I always appreciated Bush second. At least he had the idea when he was reelected. He knocked it down from 7 dictators down to about 2 or 3. And then there's these last few dictators, they got to be taken out. And, when we have a democracy, the world's a lot safer place. But we have to, unfortunately, we have to spend the human capital and the treasure to get the job done. You can't be complacent. There's always going to be a Hitler popping up somewhere around the world sooner or later. It's just the way the world works. And these guys are, they're blind. They're like they've got blinders on. They don't understand. They don't respect. I mean, what Trump said yesterday about look at our history. You remember the famous line? The Japanese when they bombed Pearl Harbor. And then they started getting incoming themselves. They said we've awakened a sleeping giant, and they were annihilated.
And what were they thinking?
Exactly.
Yeah. And
it's the same. Look, it's the same all over today. Different players, but you got this maniac in North Korea trying to pull the same stunt, and as I've said before on this show, China is scared to death of Japan rearming and becoming more powerful, because there's a lot of animosity between the two nations. But what that would do is it will keep China in check and maintain a balance of power in the East, so that hopefully we can all live peacefully.
Boy, that would be nice.
Yeah.
We're long overdue for that.
Sure. I mean, the nuclear. We live with the nuclear threat every day of some kind of an accident or something going wrong. Fortunately, we've managed to live this long without any incidents. But one of these days, something really tremendous could happen. There would be like 9/11 to the power of 100 or even 1,000, and that will rock the world when that happens. If that ever happens, there'll be hell to pay. But the only way to prevent that from happening, is what they should have done the first time around, which is got to hit them 100 times harder. And again, if they'd done it properly, if they'd used one of those mother of all bombs in the Tora Bora in Afghanistan, they probably would have taken out bin Laden in 2001, and probably saved. We would have saved the British 2007, I think it was, the 7/7, the Bali bombing, the Spain trains, you know, and everything else since, and probably ISIS as well. So we paid a huge price by not stomping out the terrorism when we had the chance. Just the same as Israel paid a huge price for not taking out Yasser Arafat.
Yeah. Well, we just got to look at what's ahead, you know.
Yeah.
And how we're gonna deal with that.
Yeah. Quick. I'll do a quick run around on the markets. Wow, I missed that this morning. The wheat. Can you believe this? Came down to 420 in a test, and it's back to 425 now. I think it probably, you know, the wheat. You probably want to have a buy stop above the wheat, and if you want to risk going through the report that comes out tomorrow, you could probably take a shot at it. The way the grains are poised here, it almost looks like we're going to go through 1,000 on the beans, and probably going to rocket higher on all the grains. That could be very bullish for the gold. The gold has been excellent. It's been very, very impressive. It's been very impressive to this morning. We actually sold it up around 1287 and the silver 1722. It's pulling back here just like yesterday. We want to use that pullback as a buying opportunity. The nugget is not, it's still testing around the 30 area. I think we may look back as the 30 as being a great entry point. Remember the last time the nugget ran up to about the high 30s, pretty good trade before it ran into trouble. But this time, if we start getting up around the 1290, above that, we could do really, really well. So, but I think the gold is actually creating a kind of a very good structure from which to rally. And so I think, look, you can't, there's no guarantee, you just can't buy the gold and hold it because it's a trading situation right now. I think it's a little risky. You just can't say, that gold is going up and there's, nothing can go wrong. I don't think we've had too many kind of false starts. So I'm not in that sort of comfort zone just yet. But the copper also had a nice buy. We actually put a buy out on that yesterday on the pullback, and so and also look at the palladium. It's up dramatically today. It's taken out 1,000. This is the first time palladium's gone through 1,000 in nearly 20 years. So this is a really, really big deal. And lumber, we put out a buy somewhere in around the 453.4 this morning. And it's, I think it's lining up to take out the 460 all-time high. Could go to 470, 480. It's certainly positioned to do that right now. The coffee is starting to look better, and look at that cocoa. Wow, we put out a rebuy at 2170 or 2175 yesterday, and it's at 2210 right now. So the cocoa, like we were saying yesterday, I mean, once you start getting into the 22s on cocoa, I think the path of least resistance is probably going to be up. The sugar also is creeping higher. Look, it's a very good sign for the commodities sector when the softs are all going up together. And right now, all the softs. Look at the orange juice. I mean, this is perfect. This is as good as it gets. And because it starts getting back into a downtrend, I think it's going to go to new lows. It could possibly go to new lows before the end of the year. So that's going to be interesting to see whether the dollar, and that might drag the market down too, possibly. So
Crude really got slammed in the last hour.
Yeah, we actually put a sell out on that this morning on all of them. I mean, honest to God, Dwayne, I just do this as a discipline, just like you do. We put a sell out at 183 on the gasoline today, after being long going up into that thing. I think we got 57.50 on the crude, and 94, 93 and a half, 94 on the heating oil, and we're actually just about even on the natural gas right now. But this might mean that we've put in a bit of a high on the crude for the time being, barring something happening in Saudi Arabia. And
our highest weekly zone this week for crude was, oh man,
yeah. Do you see the reversal on that?
All the stuff I just go ahead.
When you see a reversal like that, it usually means some kind of a top is in. It's not a guarantee, but it's usually a sign that we've kind of gone far enough for the time being.
So I just wanted to tell everybody, all those zones that I just put up are the ones that I rolled over to this week, to a day early for you. I was looking at the wrong set of notes, so I'm going to have to go back and change them. The highest zones, 5790/95 for this week. If I'm looking, I'm looking at the right set of notes. Now, Sunday night on the Globex Open, we opened down around 55.80. Made a strong run up on Monday. We had a $1,000 per contract move on the Concierge Trade Alert. And it's just been kind of sideways until we get that big run up this morning, where we hit 57.90. The swing high was 92, and our highest weekly zone was 57.90/95. So right smack in the middle of it. So now, just to remind everyone, our partners get these zones Monday morning at 6:15 a.m. Eastern, before Wall Street wakes up. So I hope that, if you take nothing else away from today's show, look at crude, look at where it ran to, and then look at where it ran away from once it touched it. It touched that zone, and look at what we've done. We've come all the way back down to the next zone below is 56.60/65. So 56.65, and here 56.60. Now, having that information available to you as you're placing your trades, we do have, again, traders that trade zone to zone. Others use it as a backdrop to their trading. But this one move this morning, that took us from 65 up to 90. What is that, 25 points? Let's see. No. I'm sorry. It's much more than that. From 56.65 to 57.90. What is that? That's $1.25, correct? So that's $1,250 per contract, up, and then $1,200 back down, zone to zone to zone. So anyway, I didn't mean to interrupt you there. I just thought it important to point this out while
thanks.
we're here.
Actually, just want to tell you, we had a bit of luck with Twitter. These days, by the way, I'm kind of refining all this stuff that I'm doing, and at some point in the not too distant future, I'll be announcing a way that people can kind of follow some of what I'm doing.
Yeah, people would like that very much.
Thanks. Maybe we can work out something between us on that.
Yeah,
and
we'll
also, Dwayne, the Twitter, but to give you an idea, this morning, look, we bought Twitter on the open. I think it opened around 1970 or something like that. We were actually long yesterday on Twitter, and we bought more. So we were long from 1955 yesterday. I think we sold it actually at 1970 or 75.80, and then bought it again this morning, and we sold it at 1990, I think, 1990, and shorted it. And then we went back long at about 1950 or 55 maybe. And then we're still long right now, at Twitter. But we got to stop just below the market. You know about they've expanded the thing now to 280.
Yeah, everybody, as of today, everybody has access to that?
Yeah. I think that's pretty
guys,
smart,
if you use Twitter, they've just doubled the amount of characters. And some time ago, they stopped counting images and videos against the character count. So you can really pack in a pretty good message. Now, that foundationally changes Twitter as we know it, because what it forced you to do is it forced you to really think about what you were saying. And I know for me, I can tend to get a bit wordy, and it really helped me pay attention to what I was saying and helped me to learn how to say what I wanted to say with a lot fewer words. So for me, it was a good thing. It's been a great learning experience, and of course, you know, even 280 characters won't allow you to say everything, but double, that's pretty good.
Yeah, it's a huge improvement for sure.
Okay, guys, I'm now putting the right zones on gold, not the erroneous ones that I just put up there. So.
Yeah, another one of that KBSF is up 266% now on the day. So it's a sign of the times when you get these a rash of big gainers. It usually means you know, you know, look, the hard thing about today, I'll tell you what this reminds me of, actually, Dwayne, in a minor sense. The thing that caught everybody out in '87, right, was, you know, we had, let's see, let's just check out Google for a second. I think Google is an interesting example. Right. You know, Google on this last run went to about 1050, right, on the Goog, and then it went down to 1010, which is you know, a pretty big sell-off, and then it's had this kind of rally back to 1040, right? Mm-hmm. But it hasn't made a new high. Now, on the other hand, Amazon did make a new high, right? And what's the other one? Apple, okay, also made a new high, looking pretty strong. But Facebook has failed to make a new high, and Netflix is also in the doghouse. So and actually Netflix has potentially broken an uptrend. So what I'm getting at here is, you know, if we were to go down, this is why a down close or two would be could be a real problem for the market. Is in '87, you know, there was a big sell, right? The initial sell-off from the August top sort of went down into September and into early October. And that had a huge rally, or it had a huge rally late into September, right into the end of September. And of course, everybody thought it was business as usual, right? Because I mean, it's kind of like just like today. You know, we were at 2,700 back then. So we topped out at 2747, somewhere like that, 41.7, 2741.7. And then we sort of imagine going back down to 27, right? And sort of going back up again or something like that. And then what happened was, as we did this on the radio here back in early October, the market, the first few days of October, that was the top. And then the rest of the month was down, right? So imagine if you came in tomorrow or sometime maybe in the next few days, and all of a sudden Facebook opens down like $5 or $10, and Google opens down 30 or 40, mm-hmm. and Amazon, they all do. You could have a scenario where a really big gap down would just you know, there'd be no buyers, and look, you know, all the writing is on the wall because of what Garrett was saying today. He made some very good points, you know, especially because that value line index is the real body of the market. Take a look at LABU. I mean, we've broken the downtrend ages ago, like back in late October. From a high at 90, we're down to 75. I mean, this is the drug sector, right? And you got this insight today, you know, making new lows as we speak, practically. You've got Celgene, which is like the, you know, Celgene and Amgen, which are the godfathers of the tech sector, of the medical sector, you know, down substantially. Celgene in particular is down about 30%. So more than that, 40%, 40. So, you know, this is a big deal. And then you've got Priceline down drastically. You know, really, I mean, look, if you can't imagine, in a way, take a look at Priceline before yesterday. You could say you know, Facebook is like a baby version of Priceline almost, where it had a break and it's rallied up, but it failed to make a new high. And so,
you know, it took Amazon 2 decades to turn a profit.
Yeah, I know. And I mean, look, Amazon may be the invincible right now looking stock, you know, with Bezos being, you know, richest man in the world and all that kind of thing. But it's, in my view, it's probably got the most downside, because when it does go down, the fact that it's barely profitable is going to be, you know, it'll come home big time for that stock. You know, Facebook and some of these others may do much better than Amazon. I think Amazon could be another Priceline, actually, you know, when it happens. So, but look, you know, remember the dynamics here. We've got this tax. Look, that chart that Garrett showed. Obviously, if the advanced decline starts going up again, right now we're still negative today, but it's gone from minus 700 to minus 100, so it's had a pretty big improvement. And you know, if we start getting back into you know, plus 10, plus 1,000, plus 1,500, it means that a lot of stocks are going up, and that is going to. I mean, look, yesterday we were up barely, but we were up on the back of Priceline. Today, Priceline's up a little bit, and look how much more the market's going up. So the market is going up. You know, Nvidia's down today. The stocks are down. So you know, the power of this market to go higher, the ability of this market to go higher in the way that it's happening is pretty awe-inspiring, to tell you the truth. Because you know, I can't quite put my my finger or my mind on what's actually driving the market higher today. You can, you know, because most of the stuff I'm watching actually isn't performing very well.
Yeah. Well, you know, that concerns me. I mean, you know, it does. You know, and then you know, well, this time it's different. Well, I don't know. I don't know.
Well, the tax thing is huge. You know, there's you know, the tax thing is the magic potion. You know, the witch's potion that's making this market go much higher. And as I said, you know, many times, the closer we get to passing this tax, you know, the market could actually accelerate higher. That's the crazy thing. I mean, we're sort of at a level today where, okay, we are seeing these, you know, some of these negatives creeping into the market, and yet the market is so resilient. It's amazing. It's amazing. And you have to be prepared. Look, you know, where are we on the Dow? You know, we're sort of more than 1/3 of the way.
We're right inside of a weekly trading zone. 23.4. Actually, it should be 23,500/505.
Yeah, I mean, we're you know, we could have an acceleration to a 600 point Dow up move could take us up to 24,000 potentially. But I'm really worried that where this Gottman threw in the towel, because, as I was saying earlier on in the show, that the 6 analysts who were very bearish on the market during the 9 up years from 2001 to 2000, they all threw in the towel around 2000 and said, the markets can still go higher. That was the top. When they all threw in the towel, that was the top. And Gottman has sort of thrown in the towel here. So another reason to be careful. And look, what's some exogenous event is what's going to rattle this market, because we're only up 3 points on the S&P, but imagine if something happens that we come in tomorrow morning, we're down 30 points on the S&P, then that's going to get everybody's attention, and immediately that happens, they're going to think of Priceline, and they're going to say, I'm out, and that might be the time when everybody is trying to get out the door at the same time,
Mm-hmm.
So, and that's why these shots across the bows are usually, there's a few more than just Priceline when they happen, but there's definitely seen this before where stocks, we haven't seen stocks being cut in half, too much. You've seen it maybe in the smaller stocks, but when stocks get cut in half out of the blue, that really freaks out the fund managers,
Yeah, a 50% retracement in a stock is, that's substantial.
Yeah.
We got, I don't know if you were tuned in, we got, thanks to Fuad, he sent me a link that had the specs for the new futures contract that's coming out.
Oh, great.
And I've got the page up right here, I believe. Okay. 5 Bitcoin. The contract unit. So you buy 1 Bitcoin or sell 1 Bitcoin contract, and they say they will release it before the end of the year. 1 contract will contain 5 Bitcoin, as defined by the CME CF Bitcoin reference rate. Outright $5 per Bitcoin equals $25 per contract. It will trade the same hours as, oh no, wait a minute. Yeah, it'll trade from 5 p.m. to 4 p.m. Central Time, Sunday through Friday. Yeah, so it'll trade just like the other contracts. The only thing they don't really tell us in this release is what the margin is going to be per contract. Because they're putting they're putting 5
valuation on the contract of how much it's worth.
Well, you take the current price of Bitcoin, and since there's going to be 5 coins in the contract, so I would think, hang on.
So that's 35,000.
See, here it is up on the screen right here. So let me go to current price. Take a look at the chart. Okay. Trading charts. Okay. Now, I've still got to fix this, guys. This is not supposed to load up Apple. It's supposed to load up BTC/USD. There we go. And I want it to default to candles, but it looks like we came really close to hitting 8,000. Now, what have I'm on an hourly chart in the past hour, but we've retraced. So let's just let's call it 8,000. If you got 5 coins, no, that's not how you do it. wait, okay, you got 5 coins. And let me bring back 5 Bitcoin. Minimum price fluctuation. So a tick would be $25 per contract. I don't see with the S&P. It's really easy. You take the current price, you multiply it times 50 because it pays $50 per point. So right now on the S&P 500, I mean, it's just, we're trading 25.90. So you just go, my little calculator here, 2,590. $2,590 times the $50 per point times 50. So when you buy one S&P 500 E-mini contract right now for $500, you're controlling $129,500 of S&P 500 best of breed equity. So the minimum price fluctuation. Yeah, I'm not gonna commit to the value. Anybody in the audience got any suggestions, Fuad? Have you thought about it? And all of the other ones, like the YM or the Nasdaq, it pays $20 per point. So if you go to the NQ, current price is $63.39. So you just take $63.39 times 20, 126,780. So when you buy one Nasdaq E-mini contract, that's how much equity you're controlling for $500. The S&P, the Dow, the Russell, and the Nasdaq, well, you just can't beat the bang you get for your buck there. Now, of course, you still have to know how to trade. That's critical. Fuad says, I think it's 25 a tick because... Oh, now Jim says the margin will be 2,000. Jim, tell me where you found that, because I was all over the CME chart, our site. I couldn't find it. Did you see that in a press release, or where did you read that? So considering how volatile it is, 2,000 as a starting point, not so bad. Not so bad. Now let's go back and let's take a look at the volatility today, for instance. I don't know how volatile today's been. This is an hourly of 30 minutes. Okay, here's a 1 minute chart. All right, so and this time is UTC. But in the last hour and a half, we went from 79, we'll call it 7,900. We've dropped almost $900 in the last hour and a half. $900. Now, can you do the math on that, Fuad? Oh, Jim, that's your opinion. The margin will be 2,000. Okay. I was thinking possibly as high as 5,000 until they have some kind of track record with it. So an $800 move, how many ticks is that going to be? All right, so Fuad, if you could see my chart, in the last hour and a half, Bitcoin versus the US dollar, it has dropped from 7,900 basically to 7,000. But we're just going to call it an $800 move. So Fuad says 800 divided by 5 equals 40. Okay. So 40 ticks at $25 per tick is $1,000. Okay. Yeah, see, an $800 move in the underlying contract. It seems like it should pay more than $1,000 per contract for an $800 move. Let's take a look. Let's take a look at the Dow. Okay, the Dow is at 23,498. 23,498 times $5 equals 117,490. That's the value of one YM contract. All right, well, we'll get it all sorted out. John, anything else you want to cover today?
No, that's great. Thanks very much.
Well, thank you so much for being with us. This, again, is a look at the 1 minute chart. Let's go to the 1 hour. Okay, yeah. Boy, look at that thing. Look at how it got rejected, John. You see that?
Yeah.
This is, that's 1 hour. And it ran up and came down hard. And in 1 day. All right. Okay, well, we'll talk to you again same time tomorrow.
Great. Thanks a lot.
Thanks so much.
All right.
Okay, Fuad says, I'm thinking that if the volume is over 100,000 contracts per day, then this is tradable. I think we'll see. It'll take a little time to catch on, but I think volume is going to be pretty substantial. Let's just see what the underlying average daily Bitcoin volume. Now we're talking about just the Bitcoin itself, not the futures contract. Okay. Okay. Can we get just, I guess this is just Bitcoin. Okay, and what are they giving us down here? Let's go. We need to find 1 day, 24 hours. This is going to take some getting used to, guys, but we'll do it. We'll be here to walk you through it every step of the way. Any other questions about anything that we did or did not cover today? Okay, these are the correct zones on the Dow. Just make sure. Yep. Sunday night Globex Open was right. Right there. Down to the zone, up to the zone, and consolidated. And up to the zone, down to the zone, up to the zone. And a little monkey business there. Some more consolidation, and then a run to the zone overhead. 540, 545. Back down to the zone. Try it. We got pretty close back up to the zone. Back down to the zone. And then in the next 30 minutes, we went all the way to the zone below. And this is tough right here, but it happens. So there we go, from zone to zone, back down to the zone, back up to the zone. And so as we sit here in the zone, I know with absolute confidence. There's very few absolutes in the world of trading, but I absolutely positively know that by the time we talk tomorrow on this radio show, price will either have touched 540, 545, or it will have touched 450, 455. Now on gold, let's go back to Sunday night. From zone up to the zone, consolidated. Remember, the most likely thing that will happen when you hit a zone is that you'll get consolidation. Here, I'd have to call this the old hot knife through butter. Now, it did exactly what we expect. It pulled back to the zone to confirm that this was going to be good support. And what did it do? It failed the test. See, typically it would go here, back, consolidate, and then continue in the direction of the slice. Didn't happen. It had a zone-to-zone move here, and then a zone-to-zone move back up. 600 down, 600 back up. And this just kind of hanging out here. I don't know. We got a leg, and we're just looking at the last leg right here. We've pulled back to the 50% retracement. We may hit the 62. Now, last night on the Concierge Trade Alerts, we said to consider buying 1282 if you got the chance. We do know that important prices, important areas are almost always tested. So we might overshoot the 62 just to get down to that 1282, which would then trigger another potential trade for you, and the overhead target would be 1292. Because now that we've advanced this far towards the next zone, for us to simply fail here and just roll over, that would be highly unlikely, or unusual, I should say. So at some point, you'll be looking for your setup here. And on crude, I used to think I understood crude. Okay, there's the Sunday night Globex open. And we made it up to the zone at 56.60/65. Yep. Now, that's a hot knife through butter. Did it do what it was supposed to do? Nope. And when I say what it's supposed to do, it is what we think it's going to do based on historical observance. We've been publishing the zones since December 14th of 2009. So we've done a lot of historical observing. All right, all those attempts, it never made it to the zone overhead. And then we get this run. Oh, I forgot today's crude inventory day. But that should have been... It shouldn't be there. Okay. According... This chart says it's 3 o'clock in New York, but it's only 2 o'clock. So if the crude numbers come out at 10:30, then it should be 11:30 on this chart. Huh. Well, it did run up, and it did run right back down, and now we're just consolidating right above the zone. So we'll keep an eye on that. The Russell did go zone to zone. It was a meandering, drunken process, but it got there. And now that it's moved this high, we would expect it to take us up to 86, 87. If you want to learn more about trading the zones, or if you just want to learn more about the zones, go to Google and Google CFRN weekly trading zones. You get about a couple pages of articles and comments and whatnot that I've written over the years, and at the top of the Google search page, if you click on images, you'll see some charts, and some of them, go all the way back to 2009. And you can, on our blog, find lots of charts. On the blog on our site, also our Google Plus blog, which is emini.cfrn.net. And our old website, cfrn.net/archive. That's got a lot of the really old weekly trading. In fact, you can go back and find December 14th of 2009. You sure can. You can see the very first day we published. Michael and I traded them a while before we started publishing them, but they have been a very firm foundation for us to build everything on. Okay, that's going to do it for today, guys. Take one last look here at the ES. Okay, with this move here, market looks like it wants to pull back to the zone, confirm good support, and then possibly we get a move up to 94.95. Because again, we've moved from 88 to 90. That's kind of my benchmark. Once it hits 90, then I'm pretty sure it's going to attempt to go to the zone overhead. But I have to allow for the fact that it may want to pull back, confirm, and then make the move. So we'll see. We'll see how this pans out. Now, if you have not taken the trial, the free trial in our live training room, it's 5 days, 2 hours a day from 9:30 a.m. to 11:30 a.m. We treat you just like you're a partner. You have access to the indicators. We answer all your questions. We attempt to teach you as much about the strategy as we can during the week. It's different probably than anything you've seen. We use very aggressive risk management. We never risk more than 8 ticks on any trade. Doesn't matter which market. We trade every market exactly the same. S&P, Dow, Russell, NASDAQ, gold, crude. And when Bitcoin comes along, before the end of the year they say, we'll trade it exactly the same way. Okay? We use a range chart for trading each of those markets. So it's not a time frame as much as it is a price-based chart. Every candle is exactly 4 ticks tall. The S&P, that's convenient because that equals 1 point. But it works well on all markets, creates great symmetry. So if you want to take the trial, you haven't taken it, go to apply.cfrn.net or just go to our homepage, cfrn.net. There's a place that you can sign up there. You'll get an email immediately that has the link and the password for the current week. Then you'll get an email sent manually that has a lot of instructions. So you're going to have to take some time, read through it, so that you'll be ready for the live training room tomorrow. That email explains where you go, how you set up the platform, how you get the indicators going, everything. Everything you need is there. But if you find out you need help because you can't find everything that you need there, call 866-928-3310. That's if you're using the DT Pro platform like Michael and I use. If you're using Ninja, call us 949-42-EMINI. We'll do our very best to help you. Any broker that clears through Gain Capital, and that's a whole lot of folks because Gain Capital is one of the largest clearing firms out there, if not the largest. If your broker clears through Gain, they will have a platform available that looks almost identical to this. Instead of having Daniel's Trading's logo up here for DT Pro, it'll have that broker's logo, but our indicators will run on that chart. Okay, so we invite you to, watch for a day, ask questions. By day 2, you can be trading in the simulator along with Michael, and then over the course of the week, practice a little bit on your own, so that because there's only 5 steps to the strategy. So when you spend a little time trading alone, you'll quickly find out what you don't yet know. And so the next morning, ask those questions in the live training room, get those answered, and by the end of the 5-day trial, you will have a very good idea of whether or not this is exactly what you've been looking for. This is rules-based trading. Every move we make, there's a reason, there's a rule. Again, there's only 5 steps to the trade. Doesn't matter if you're in Brooklyn or Bangladesh. If it's time to go long on the S&P 500, everybody that's a part of our group knows it. They also know at exactly what price they're supposed to enter and exactly what price they exit if they're using a bracket order. So no more guesswork. Once you know how to read the chart and the indicators, all you got to do is show up, put on, take off trades until you reach your goal for the day. Okay? Now, if you've taken a trial in the past and you've gone out and looked at some other stuff and you're like, I wish I could get another trial with CFRN, send an email to support@cfrn.net. Tell us that you would like a second chance. Tell us what you've been up to, and we'll work it out for you. Okay? Tomorrow night, Thursday night, is our partners workshop. If you've been on the trial for the past week, Michael is sending out emails today that explains what it takes to become a partner. If you have any questions on that, support@cfrn.net or 949-423-6464. 949-423-6464. We'll get those questions answered for you. Okay? All right. CFRN, where people become traders. Thanks so much for tuning in today. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.